All right, let's check out some more questions. We're looking at an introduction to managerial accounting, just trying to get some cost concepts down. So let's start right here. It says, which of the following is true of a variable cost? Choice A says a variable cost in total changes in direct proportion to changes in output within relevant range. Well, now, we haven't actually studied relevant range quite yet. We're not going to worry about that. Let's look at the first part of it. It says a variable cost in total changes in direct proportion to changes in output. And that is the very definition of a variable cost. So I have a feeling that this is going to be our only correct answer. As I look down through the rest of these, let's look at B. A variable cost is a cost that is not linked to a company's output. Well, it absolutely is linked to output. A variable cost in total remains constant regardless of the level of output. They're describing a fixed cost. And quite honestly, B is as well. And D, let's see what they have. Variable cost in total increases as output decreases, and decreases as output increases. Well, this is the opposite of how it works. Variable costs, with each unit of production, the cost increases proportionally, which is what we had up here. So A is in fact the correct answer. Okay, I have a question about opportunity cost, and it says an opportunity cost is, and choice A says, the benefit given up or sacrificed when one alternative is chosen over another. Okay, sounds pretty good. Let's see here. Choice B says the cost to market, distribute, and service a product or service. Okay, that's going to be a selling expense. So that's not right. C, except in the period in which it is incurred, it is not inventory. That's a selling or administrative expense, just a general operating expense. So that's wrong. The difference between gross margin and operating expenses, that is also wrong. So we were correct. Let's see, where is it? Choice A. Remember, one of the components of managerial accounting is decision making. And so in a business, I want to kind of talk about the concept of opportunity cost. In a business, we have generally finite resources, meaning we might have enough, if we have, if we have project number 1 and project number 2, well, we may have enough money to do either project 1 or project 2, but not both. So if we decide to do project 1, we give up the benefits of project 2, and if we decide to do project 2, we give the benefits of project 1, or we miss that opportunity for the project that is not undertaken. Therefore, that is going to be the correct answer. Okay. Product cost consists of A, period cost, B, indirect materials, indirect labor, and administrative costs, C, direct materials, direct labor, and selling costs, and D, direct materials, direct labor, and overhead. So period costs are general operating expenses, general operating costs, and operating costs are not product costs, so that's going to be wrong. Choice B, indirect materials is a product cost. Indirect labor is also a product cost. Administrative costs are not a product cost. Choice C, direct materials is a product cost. Direct labor, also a product cost. Selling costs are not a product cost. We only include in product costs those costs that are essential to finish the product. When we're selling the product, that's coming after the product has been completed. So choice D, direct materials, yes. Direct labor, yes. And overhead, yes. So D is going to be our correct answer. Let's see what we got here. Direct labor is well, we kind of just answered that, did we not? See, look, we've got a check mark right here for direct labor being a product cost. Choice A here is a product cost. Might as well go ahead and circle it. Direct labor is not an opportunity cost, nor an administrative cost, and it is most certainly not a fixed cost. It is a variable cost. Therefore, A is the only correct answer. Which of the following would not be found on an income statement of a service organization? Now, I didn't spend, in my PowerPoint lecture, I didn't spend too much time on service organizations, and the reason for that is because there's a little bit less going on. But we still need to understand, and this is really not even a managerial accounting question. This is really an accounting 1 type question. We should already know this. So let's see here. Which of the following would not be found on the income statement for a service organization? Selling expenses. Now, they may not be labeled specifically as selling expenses. They might just be labeled as payroll. But we're going to find that on there. We are going to find sales revenue. Might be called service revenue. So this is a little bit tricky here. So D is possibility, but I think we have a better answer. Operating income is always going to be found on an income statement, but cost of goods sold, in order to have cost of goods sold, we must have inventory. And a service-related business does not have inventory. Now, again, if you're looking here at choice D and you're saying, well, you know, the way that I learned it was that sales revenue is the way that we would talk about a merchandiser. Okay, that's fine. But choice B is still the correct answer. We would have some type of revenue even for a service organization. So B is by far the best answer. All right, and then let's see here. It says, last question, I'm right here at the bottom of the page. It says, which of the following is not an example of a direct materials cost? So direct costs must be easily traceable. Shelves on a bookcase. Nails used to manufacture a desk. Tires on a bicycle. Engine in a car. Okay. So if we look at these, and if you look at these, you know, and you're thinking about this and trying to figure it out, my experience with a question like this is that students can pretty much eliminate a choice like letter choice D, engine in a car. They can pretty much figure out that is a direct material for the car. It is very easy to trace. So is it traceable? Yes, it is. So therefore it's not the answer. Tires on a bicycle? Yeah, traceable. Nails used to manufacture a desk? I don't know. Shelves on a bookcase. Yeah, we can trace shelves on a bookcase. Bookcase probably going to have 4 or 5 shelves. We can trace that. This is going to be our answer. Now we might be able to say, hey, you know, each desk requires so many nails. Well, it does, but how many nails did we waste in the process? That's a little bit more difficult to know. So shelves tires and engine are going to be directly traceable to a cost object. Nails, probably not. All right, let's wrap this video up and we'll get started on another one.